Inflation, is it here or is it transitory? We're in a little bit of a perfect storm where it's been a little bit of everything, including the demand for consumer confidence as they stayed pretty high. We've been spending a lot of money as consumers. We've been hoarding a lot of cash. The money supply has gone through the roof. It has unprecedented levels of about $21 trillion in cash, looking for things to buy, whether it's a home, a car, or simply a stock or going out to eat. So we're having a lot of money chasing fewer and fewer goods. We've definitely felt inflation. It peaked about July at about 5.6%. Now in August, we recently got a new print on the CPI, which is a consumer price index, at 5.3. So it has showed a little bit of slowing. And that is why the Federal Reserve is kind of saying this is transitory. But is it going to go down much faster? That's a whole nother set of questions. Historically, if you go back to 1926, the U.S. stock market has averaged about 10.3% rate of return per year, and inflation has done about 2.9. So there's a nice spread between there. So again, you want to make sure that you stay invested. The other is looking at how you're invested in the bond side of things. If you're invested in long-term bonds, interest rates go up, you're going to get hurt. Your value of those bonds are going to get eroded by that inflationary pressure. So you might want to consider shorter-term bonds. Shorter-term bonds tend to mature a lot more frequently, so if we do see an increase in interest rates, which generally does come with an inflationary environment, it's like getting a pay raise when you do see interest rates go up if you are invested in the right maturities, and those again tend to be more short-term bonds. The last thing that you want to make sure is that you use an accurate assumption for inflation when you're doing your planning. So you don't want to underestimate the inflation over, let's say, a 30-year retirement picture. Here we use generally about 3.7% rate of inflation for cost of living. Some things a little bit higher, whether it's education or health insurance. But when planning your retirement cost of living, you got to make sure you use an accurate rate of inflation. And that's looking at over a longer term projection. So again, as we're sitting in a short term, kind of transitory, kind of elevated situation with inflation, might be a good time to pause and look at your long and midterm goals as well.